major U.S. indices hovering near closing record highs. This ahead of Nvidia earnings out on Wednesday. A lot is riding on this report. You've got the chip giants accounting for about a fourth of this year's return on the S&P 500 so far. We bring that up because of Nvidia, and we've got Nvidia reporting results after the bell on Wednesday. Here to break it all down and what this means going forward, we want to bring in Randy Frederick, founder of RandyFrederickMedia.com. Randy, it's great to have you here. So talk to me just about what we are seeing here when it comes to the fact that we are at record levels. Lots of focus is on Nvidia right now. How important is this earnings print to the overall market?
Well, NVIDIA has been important for a very long time. Obviously, everybody's familiar with AI. It's still in its infancy, but it's not going away anytime soon. And I think many people, and I share this opinion, AI is going to change things as much as the internet did when it came about 30, 40 years ago. So that's very, very important. And as you said, it's been a key component to the overall growth in this market. But as Jared was talking about earlier, there are a lot of signs that show that things are doing quite well, but oftentimes things get just a little bit ahead of themselves. And I think we may be at that point right this minute.
Is there a risk to the overcrowdedness that we're starting to see in some of the generative AI trade right now?
There's definitely a risk there. And again, remember back in the year 1998, 1999, 2000, when just about every company in the world added .com to their name so that everybody could pay attention to them. And then many of their stocks doubled, tripled, quadrupled, went up 100-fold even. This kind of thing is happening to some extent now. You've got a lot of companies that have changed their name to AI, something AI. It's in there somewhere. Or they talk about, oh, yes, we do AI too. But it's really important to sort of separate the companies that talk about AI and say, yes, we'll be involved in AI, to those that are actually creating it or actually using it to do things for real. And you really have to do research to make sure that you know the difference. NVIDIA is obviously a company who is doing AI. They're creating hardware that makes it work. But a lot of these other small companies that talk about it a lot, in many cases, it's just a Me Too pile-on to sort of get some attention. That's important for investors to do real research from reputable sources to make sure that they get this information. Talking to some 22-year-old on Reddit is probably not the best place to get investment advice about things like this.
Randy, if we do see Nvidia miss the mark, though, how big of a narrative change could we expect then for the broader market?
It's probably not as substantial as you might think. I mean, it's definitely going to hurt that stock, but it's got a lot of upside that it could give up a whole lot of that and still be way ahead of itself. Because even a weak quarter is not going to make AI go away, and it's not the end of the world. It's still going to continue. So even if things get a little bit overheated, and so there's a reset or a correction, almost like you would see in the stock market in general, not a terrible thing. It's probably a one-quarter setback. And in fact, we've seen this in a lot of companies. They'll have a weakness for a month or two. In the long run, I would look at things like that as buying opportunities. That doesn't mean borrow all the money you can get your hands on, and back up the truck and buy everything. But it's a really good opportunity to either add a little bit to your position if you have one, or if this is something you've been looking at doing, you need to probably add a position when those types of things happen. Right now, the market's at an all-time high, or just a couple of points away from it. You've got to look for opportunities to buy when we have dips. And as I said, I think we're probably due for one right around now.
Randy, I'm taking a look at some data from Options AI that is showing an implied move or an expected move of about 9% post-earnings here. What would this company need to come out and say about not just the earnings and revenue for the last quarter, but the guidance for the rest of this year and how much legs are still left within this broader demand profile that they're seeing right now for generative AI that's added an entirely new catapult to their own success?
So two things to point out. One, the options market is pretty good about predicting the movement of stocks, but keep in mind that when you say 9%, that's to the upside or the downside. Mm-hmm. Options don't necessarily predict direction. They predict volatility or the amount of movement. So you could see that big of a move to the upside or the downside. The company basically just has to continue to do what it's been doing all along to show that it's executing, to show that it's developing, to show that it's continuing to make forward progress. But again, if for some reason the data isn't outstanding, and again, the expectations are very high, then perhaps there would be a little bit of a pullback. But to be quite honest, I mean, the majority of my career was spent based on reading the tea leaves of the options markets and to some extent the futures markets. And those types of forecasts are actually pretty accurate in the longer run.
So, Randy, where are you seeing that investment opportunity right now, given the fact that you think we are due for a bit of a pullback? Maybe it makes sense then for investors to put money to work then, but where?
Well, the reality, yes. Again, so The whole expression that you've heard many times over many years of sell in May and go away, surprisingly, it's not entirely accurate, but there's an element of truth to it. So that the belief that you should get out in May and then come back in September is false. Yes, the market does perform less well between May and September than it does between September and May, but in the overall long term, it's not a negative period of turn. It's just a slightly lower positive period of return. But if you look at what's happened in the month of May, and I've studied these numbers, I shared them with you. For the last 24 years, we've had a decline in May, 23 out of those 24 years. Sometimes it was as little as just 2%. Sometimes it was substantially larger than that. So far this month, we've only had one downturn, and it was about 1.5%, and it happened, at the very first or second day of the month. There's a very good probability, based on historical trends, that we will see a dip here over the course of the next couple of weeks. Now, that doesn't mean that I'm bearish in the medium term or even in the long term. In fact, I think in the end of the year, the S&P 500 is going to be a couple of hundred points above where it is right now. But this is where you look for opportunities. If we get this pullback, as I expect over the next couple of weeks, that's, again, an opportunity to add to positions that you own, that you like, or to potentially take on positions that you are interested in. And frankly, the sectors that have been performing well so far this year are likely to continue to be the same ones that go forward. The ones I would be cautious about are things like real estate that are already underperformers.
Randy Frederick, who is the market strategist and founder of RandyFrederickMedia.com. Randy, thanks so much for taking the time this morning.
You bet. Thanks for having me.